year in review. So today's webinar is all about year in reviews, where we will do a retrospect of what happened in the 2024 cryptosphere. And later in the session, we will take a look at the challenges and their potential solutions, which stands ahead of us in bringing the world on chain. So I'll pass it on to you, Josh, so that you can take us all through what happened in 2024 and how 2024 was the launchpad for global growth of crypto.
Yeah, thank you, Sahil. So I think if you just zoom out on 2024, to me, this is the year that we really did start that adoption outside of kind of the DGen native Web3 space, starting with the ETFs. And so if you're not familiar with what an ETF is, it allows institutions, it allows like traditional financial investments to invest effectively in Bitcoin. And so we kind of kicked off 2024 in January with that ETF approval, at least in the US. Other countries have previously done it in 2023, leading up. I think Hong Kong was one of them. And it's really been an opportunity for, I think, traditional financial companies to get into the space, start just holding Bitcoin. And then later in the year, we saw the Ethereum ETF approved. So we're definitely excited about that. And here at QuickNode, we saw just really a lot of enterprises coming up, signing for the product, expanding their usage around this time of the ETF approvals. And then secondly, I think the layer two, at least on the Ethereum side, and the Ethereum ecosystem, the layer two blockchains are really meeting the needs of the scalability on the ETH side. And so that we saw that balloon over 2024. It's easier than ever to launch a rollup, your own chain. We're seeing more and more chains launch their rollups with QuickNode and then coming to QuickNode to host their node infrastructure. So that was a key thing. I think in 2025, we're only going to see this increase and potentially if we get, especially here in the United States, if we get some more regulatory approval around how these gas tokens are perceived, then we'll definitely see that increase even more. So that brings me to say that we saw an administration shift. And so I think that the previous administration in the US and to some degree in the EU as well was kind of anti-crypto, and there wasn't a clear framework for how to operate as a crypto or with a token. And so with potential changes coming to that, we should see more and more ETFs approved, as well as more L2s launching. And so what does this mean for QuickNode? It means for our customers, they are getting more and more chains that they can access through the QuickNode development platform. And so when we last took this metric, at least about a week ago, QuickNode powers more RPC endpoints for the L2 space than any other provider here. And so what that means for our customers is you sign up for QuickNode and you have access to all these chains in one place, and in most cases without paying anything extra. You just use your API credits to access these chains. And in addition to that, we see these chains very excited about the QuickNode developer community, and they're increasingly working with us on hackathons and programs to bring you, the developers and the users, to their ecosystems. All right. And so I think in 2024, we very much saw, I'd say our business was already mature, at least our core service, but we really saw a ton of growth here. And so in 2024, we processed 3 trillion API requests across our product. At times, our service has gone up to, we did a blog post on Solana during the ore mining event. It's hit 300,000 requests per second globally, which is really more than what Google search does globally as well, at least in requests per second. And so a lot of infrastructure engineering went into that. We have our team relentlessly pursuing excellence on how to support that. And we saw a lot of customers excited about the performance that they got there. In addition to that, this is kind of a crazy stat, but we launched 40 new chains. And so what is that? Around three, a little bit over 3 per month. And what's not here in the stat is the network. So often these chains have a dedicated testnet or several dedicated testnets that they're working on. So with those included, we actually integrated more like 60 chains in 2024. So a lot of work on integrations. And to my point earlier, giving our users, our developers access to more through the same platform. And then shout out to our DevRel team and our content team, 150 plus docs, guides, and courses. And we also have one of the only fully technical integrated marketplaces in this ecosystem. We have 70 new APIs from third parties, also from QuickNode that we've launched in the marketplace that are available as add-ons. And you can just go sign up, instantly add those, and start using new functionality in the product. And not last but not least, we also got our SOC 1 and SOC 2 Type 2 compliant. This is an important certification. We started seeing enterprises come in and need this. And so for those of you who don't know, it's a certification where it looks across how we run our servers, how we build our team, what security controls, what standard operating procedures we have as a business. We are able to meet those requirements. And so this kind of applies to all of our processes, and that helps us maintain that standard of excellence in the product and give a better service to our users.
A quick addition to that, we also just received ISO 27001, which is huge for our EU customers. You know, Josh had brought up earlier enterprise adoption, and that's a huge focus for us. Some of these big institutions, especially governments, will require that we provide these types of services, and this is what will enable governments to come on chain, and we take that very seriously. Huge milestone that we achieved last year. Huge shout out to Sahil, face of QuickNode on our YouTube channel. But we've crossed over 100,000 subscribers on our channel. We focus on a lot of content there, educational content for builders, but also general education about, hey, what is this blockchain? Why should I be using this blockchain, etc. So if you haven't yet checked out that channel, please do so. We are the first infrastructure provider in the space with over 100,000 subscribers, and we're just going to keep it going here.
Yeah, shout out,
Yeah.
call out. It's more subscribers than both the Ethereum Foundation and the Solana Foundation have on their channels as well. So great work, guys. I know our users and customers are very happy with the technical content that you guys have created with those walkthroughs.
Thank you so much. And now comes the challenges, or what are the things we anticipate in the year moving forward?
Yeah, so expanding our enterprise experience for those customers that are on board, we have a dedicated option now that we're going to double down on. That's really more of a unmetered billing model. We saw a great success with that. Some of our competitors have launched pay-as-you-go pricing. And so the way that I think about this is it's like a flat fee for all your needs versus having to think of it as like a data roaming charge that you might get on another provider. And so we're seeing a lot of customers coming over for that. We're trying to, again, help you as our users capitalize on the multi-chain future. And so we're definitely seeing access to this new chains is helping. We've seen some airdrop farmers coming in. We've seen enterprises adoption on the L2. And so we're offering those chains for you through that same interface that I talked about. And then thirdly, here, evolve RPC. And so what does that mean? I think there's been a debate within at least the Ethereum community if the node client should be expanded to enable, because these are open source node clients. And so there's a set of standard method calls that have been agreed upon in the EVM community around what you can call from a, say, like a get node. And so we're looking at ways to kind of expand that functionality on our RPC service, give you more data more efficiently, but still deliver it over those same RPC endpoints. And we've already seen great success with that with a few of our marketplace APIs that are available for your RPC endpoint. All right, Carl.
Yeah, another huge area that we're looking to support, folks, is being the roll-up launchpad. You know, there's countless people launching roll-ups, and we foresee that only expanding, especially when tokenization comes into play. We've seen people in the space like BlackRock already talking, maybe not publicly, but you know, it's come out that they're already looking at doing tokenization on chain and looking into launching roll-ups. We want to be able to support them as well as the more degen chains as well, and be the place that people go to be able to launch their chain. We are investing really heavily in this space. We have a huge announcement coming up at ETH Denver about how we're going to be able to support rollups come to market. Really, please pay attention to that. If you're looking to launch a chain, just stay tuned. We also are doubling down on our world-class performance. We are one of the few providers that actually publish our metrics about how we compare head to head against other infrastructure providers. Right now, we offer 4 nines of reliability, and that's not just an SLA that we say. This is something that we track and we commit to and we deliver on. And we continue to push forward and trying to bring that to the next level. Again, governments are not going to be able to use a platform that is going down and has outages. And that's something that we strive to support on. We really want to be the AWS of Web3 infrastructure. And finally, we're going to continue to launch additional tools for chains and foundations. Like I said, it's not just about rollups, it's about anyone looking to launch a chain. We provide all the various pieces to be able to do so successfully. We support with educational resources for your builders. We focus on helping bring builders to your chain, and that is to our audience of 1 million+ developers. We're here to try to be able to bring this to developers and help you gain traction. So various tools might include things like bridges, explorers, oracles, things along those lines, whatever you need to be successful, and we're here to support you.
Anything apart from whatever we are seeing on screen, Josh or Carl, anything apart from this you would like to share?
Yeah, we're excited. I think this is going to be a monumental year for this industry. So the reasons I already said, and we're excited to be there and grow. One of the things I like to say is that, and one of the reasons I joined QuickNode is I think that in this permissionless almost ecosystem that we're seeing kind of enterprises, governments, they need a trusted partner to navigate, right? And so I think the role of QuickNode within the broader ecosystem is to be that trusted partner. A lot of times companies come to us building an application, a roll-up, or they ask us, what chain should we be on? Who should we be looking at? And we're able to kind of guide them in that conversation. That gives us a lot of influence in this space. So we're excited to keep doing that and keep growing, mass adoption.
Another big area, especially from the QuickNode front, that we're investing heavily in is chain discovery. It can be pretty overwhelming for people, the amount of chains that are out there. And we want to be able to support both sides, developers that are looking to build, as well as the chains that are looking to get attention. We're investing heavily in the next few months in tooling to be able to better surface the right chains to the right developers to be able to drive the greatest adoption. Think about it from this perspective of any of your other tools that you use today. It's targeted, right? I'm not just trying to throw at you everything. I know what you're interested in. I know the types of chains that would benefit your application, and we're going to surface that best for you. So stay tuned on that as well.
Yeah, and very topical to this particular slide, Peter asked that they can see that there are a lot of catalysts and they are very bullish on a lot of catalysts across the industry for 2025. But they asked that what are the challenges and concerns which keeps us up at night, like us as a company or us as a tooling provider up at night?
I think a global internet outage is one thing, very rare, but could happen. All of the decentralized infrastructure in this space still ends up running on, servers, internet connections, countries, not blocking. We've seen some countries block access to, validators and whatnot. And so I think that is one thing that on a bigger macro level, but usually those things are fixed pretty soon.
Something that
Okay.
keeps me up
Yeah.
at night regularly is some level of collapse in large institutions, things like, what we saw in Mount Gox back in the day, right? Or FTX. Those are just the types of things where, I'm all for moving forward with innovation and breakneck pace, but there does have to be some checks because when those types of things happen, it sets the industry back years. I truly believe the FTX collapse set us back, 2+ years in the space, and we can't continue to have those. There needs to be some level of checks on the big, especially institutions that provide custody.
Yeah, Carl,
Yeah.
that's a good point. I think like what we need as an industry is we do need that regulatory framework. We need to make sure that there is a standard operating procedure that crypto companies can use to get users and to raise capital. And as long as we have that, I think like one big trend on the flip side, what keeps me up at night, what keeps me excited is just like tokenized real world assets, for example, stocks or equity in, say, a startup. And so, I think like one of the issues in this space is someone launched a token for their project and it really doesn't tie back to you as a user in any kind of way. You're really just speculating on some hype cycle. But if there's some kind of system where you're by holding that token, you're like a legal owner of that company, just like with a stock, you get the quarterly reports, you get the maybe a dividend that comes out through a smart contract. That's really exciting. And I think it would enable a lot of users who aren't officially accredited investors to invest in startups and have greater upside.
Yeah, I agree with you. And I think it's really about the framework and the openness of governments to work on putting that in place. Hey, you know what the rules are, you should be following them, and not much dialogue back and forth. And then, they get slapped with a Wells notice, at least here in the US. Fortunately, it looks like that's changing. I think, we're in good hands with David Sachs, and we'll be able to see some improvements coming soon. I think that's going to start, back onto this slide where we talked about the tokenized world. That's going to start with stablecoins. And I think that's extremely important, especially for those in the US who are looking to expand the power of the US dollar. The US dollar stablecoin is by far the greatest. I haven't looked at the charts lately, but I think the EU stablecoins are the closest behind, and there's a wide margin in that adoption. So continuing to invest in expanding the US stablecoin market is only a good thing.
Yeah. And on things which keep us up at night, on a lighter note, Rory said that not scaling fast enough to support the mass influx of traffic. That's true as well. So for everyone who is watching, this will be the perfect timing to ask any questions which you might have gathered or you might have come across during the course of this session. We already have few questions which I will throw in front of you, Carl and Josh. So BC asked that, will all the chains apart from Bitcoin go to zero? And the following question on that is, will there be any way for all the other chains to be profitable at a large scale?
I have a couple comments in this, like what about the chains. I think it's kind of like a lot of these chains are startups. And I guess you could ask yourself, like, why does the world need another startup? Why does the world need another restaurant, maybe? And I think like there's a lot of these layer twos are just experimenting with new ideas. And so inevitably they will die. Now, I think it's yet to be seen. Like, we've seen some of the 2017 chains like are kind of almost like zombies now. They still exist. They weren't shut down. People still speculate on them, right? There's still enough users maybe to justify keeping it running. But I do think it's kind of like this is great that so many startups are coming into the space. And so certainly separate from that, you have like, brands that are going to survive, like the Ethereum brand or some of the L2 frameworks like Optimism. I don't see those going away anytime soon. And, you'll start seeing experiments and those kind of startups, growing on that. And some will fail, others will succeed. It's not really our job to figure that out. I think we don't know who are going to be the winners and losers. Sometimes there's really good signal with the teams, but it's our job to support the infrastructure to try to make them successful and to try to get them to the next level of their product market fit and their community fit.
I think that's a great point, Josh. Did we need another search engine during the dot-com boom? Did we need another e-commerce site? Maybe not, but today Amazon and Google lead the world, right? So there are going to be plenty of chains that will not be around in the long term. To Josh's point, I think they will be a slow death, to say it kind of negatively. It won't just be a sudden drop to zero, but there will be people that are in it for the long term, and that's not from a perspective of speculation, but also something that is more so from the perspective of what gets me really excited about the space. I do think that this is the future, and I'm really excited to be helping enable people building here.
And why don't me answer one of those that BC asked? He said, or they said, will there be any way for all the other chains to be profitable at large scale? You know, so I think that's a really interesting point. One of the things that I've seen, I think everyone in the world right now is keenly aware that there's been an increase in inflation in the last 5 years globally. And so one thing that some of these chains are doing is as long as they can bring in the users, a lot of times they do have like inflation on their gas tokens. Maybe it's 3, 4, 5%. I've seen some of the teams that have used that inflation. They kind of sell those new tokens sometimes. They use that to invest in product development. There's lots of ways to make money as a chain. You can take your coin and deploy it into liquidity pools and be a liquidity provider. And so you can earn on that as well. And so a lot of these teams, like I said earlier, they're startups. So they go hire maybe 50, 100, 150 employees. And then, maybe they need to right size that over time as they really see how their crypto and their financials work out over the long run.
Back to your point that you made earlier, Josh, about on-chain stocks, things along those lines. I think that's where we're going to see the numbers of the amount of value and volume on chain absolutely skyrocket. Is new use cases coming in, right? There's only so many people in the world that we'll call it the TAM of potential speculators, right, on crypto tokens. That may continue to grow, but that is still a drop in the bucket compared to the global infrastructure for cash movement cross borders, right? Things like that, when they come on chain, because they will come on chain, because it is the ideal infrastructure for it, is going to make the volumes that we're seeing today look like it's nothing. So that's the type of stuff that gets me really excited. And we're seeing it already with Stripe and their acquisition of I think it's Bridge and the tooling that they're about to be rolling out there. It's a huge investment from the Stripe team that they're going to be making. It was their largest acquisition to date. I think it was $1.1 billion. Stripe doesn't do that lightly. Stripe does that because they know that this is the future and that it is going to become a big part of their product suite moving forward.
And they also have another question where they ask that what if there is a token that created a federal issue and triggers the people who hold that token responsible for it? What will be that situation like?
Yeah, there's a legal accountability. Like right now, there's very low accountability within the crypto ecosystem. Like if you do a rug pull, maybe later you're going to have like the FBI looking for you, but there's not that framework that makes it clear what is or isn't, above board. And so I definitely think we need to have, just like with a public company, there's a board of directors, there's, advisors that are responsible for the health of the business and making sure that the statements are accurate.
And there's another question from Peter. They asked that there was a NFT super cycle, then came the meme coin super cycle. According to you both, what what would you predict would be the next super cycle?
I think the next super cycle might happen maybe privately within these financial institutions. But yeah, maybe AI agents, that could be one. I think what's creating partially the reason for the meme coin cycle is that if it's a meme coin, if it's like a joke, then there's a little bit more cover legally on some of these things. And so that's also what has contributed to that cycle.
Absolutely. And
Yeah.
I mean, we saw this in the very early days of NFTs that it was just about launching cool art, right? They weren't required to have a roadmap and like be building all of this future stuff. It was just, hey, I'm launching cool art and here's an NFT around it. And then all of a sudden, some people were really looking at it more so as a business. And then people started to have these expectations of like building this out and continuing to provide value and things along those lines. And that's again the cover to Josh's point that you get by launching a meme coin, right? It's like it's a joke. I'm gonna throw it out there. Don't expect me to be doing anything additional for you, right? That's it. Right. So I think that is what's driving so many people to continue launching these right now. If I were to think about the nearest term, I think we're already seeing some of these AI tokens moving forward, but essentially a lot of them just seem like let's say a subset of meme coins, right? It's still the same type of thing. There's no expectation on the future value you're delivering. It's just a type of coin. Is it a joke versus a AI that's talking? Is it actually an AI that's doing all the work, or is it, just maybe writing some responses that a human is still directing. We'll see. But I do think there's certainly a lot of things coming around the AI space that is going to be pretty exciting. I think there's a lot of chains launching that are looking to be the backbone of that. And that I think is a really hot area right now, of course.
And also maybe chains, because not exactly supercycle, that's for the future, but with all the chain frameworks and products like QuickNode's RAS, it's so easy to create a chain. So maybe that is a supercycle, or that's already going on, or it's at its beginning right now. We will see.
You might, it might be clear since I work at QuickNode, but I really believe in selling, picks and shovels during a gold rush, right? So, when I think about all of these chains launching, I think about what are the tools and infrastructure needed to be able to support that, right? So things like data availability layers, there's only so much blob storage. We're already starting to eat that up on Ethereum L1, right? All of a sudden, that's going to get full. And then the cost to write L2 transactions to L1 are going to start going up again. And people are going to start looking into, okay, maybe I really should start adopting Celestia, Eigen, Avail, etc. Right? There's some good adoption there right now, but I think we're going to start to see significantly more. Also, things like bridges, any cross-chain communication, messaging, things along those lines are going to be absolutely critical.
I think these were the questions we had until now. But if anyone is still looking to ask any questions, feel free to do so. And if there is any question which comes to your mind after this stream will be, or this webinar will be uploaded to our YouTube channel. So you can, you can just leave a comment with your question and we will answer those questions right there. So I think that will be it from the webinar. And for those of you who are going to Denver, a lot of QuickNote team members will be at Denver, and we are having a roll-ups happy hour with Fuse, Polygon, and few other of our partners on February 27th, Thursday. So make sure to check that out. You can find the link to sign up in the chat, in the Zoom chat below. And yeah, thank you so much, everyone, for joining. Thank you so much, Carl and Josh, in driving the webinar and teaching us everything about what happened in 2024 and what could we expect in the year coming forward.
Thank you, Sahil.
Right. Thank you, everyone.